Hey, welcome everybody to our Sunday Notes live. Everybody here in the memberships, I sent out the alert in the futures room, options room, and the sector secrets mastery. So the link there will take you to the notes that we are looking at right now. So these notes go out to members Sunday evening. And one of the questions that I got about the notes is, Rog, okay, after I scan them, you make them nice and easy to skim through. A lot of great feedback on the charts. We don't want it to be too long and in terms of just really wordy, but I want you to see what I'm seeing. Hence, the charts are super helpful for that because you can see the volume ledges, you can see the equators I talk about. We can talk about the structure of the market by way of the JT multi, the color-coded momentum and trend indication. So we know bullish markets, bearish markets, when we have some variation of maybe a neutral bullish or a neutral bearish, things of that nature. So you can see all that on the chart. And then, so the question is, look, on a Sunday night, and let's think about our lives as traders. On a Sunday night, am I going to have every relevant level for an entry ready to go? No, but on a Sunday night, if I can be aware of those hot zones that are going to move the market in a more volatile way, what sort of topics? This week we have two topics. You'll see in today's notes. End of quarter is always a wild ride, gang. And then we've got non-farm payroll on Friday. We have Williams speaking, I believe, twice this week. So we have some interesting data that the Federal Reserve will be clearly influenced by, so we can get even more clarity about the May rate hikes. And there will be a rate hike, whether it's a quarter or whether it's a half. That's the question at this point. So how do we point ourselves in the right direction? How do we make sure we've got a general feel for what is happening at the broader index level than the sector level? And that's what these are designed to do. So you'll see we dove into NASDAQ, XLK. I've got XLY, XLC in here. I had a lot of requests for the IWM, the Russell. We put that in there as well. And then dollar. I've been talking a lot about euro. So some folks said, but Rog, is there a dollar buy? So I threw the dollar in there this week. All right, so you can check all that out. Great, and great to see everyone here. All right, so that is what you've got in your alert box, and then everybody here, whether you're part of the community yet or not, we're going to go over what it is that I've got my eye on, and of course, answer your questions. Now, I did want to talk about one thing that I've gotten a lot of questions about. Now, these are things that we do in the Sector Secrets Mastery. And if you don't know by now, tonight's the night where head on over to simplertrading.com/join/sector, because tomorrow we're going to get into watch list building, 2 p.m. tomorrow, Monday. If I were to rank all the topics that I know would move the needle for a trader, number one, I talk about this a lot. Number one is position sizing and risk management. That's the very first video you get from me. I alerted out to new members. It's in the Learning Center. That is the most important thing. That is, if there is a holy grail, that is it. Position sizing and risk management. They really are the same conversation. The second most important topic that I could talk about is how to build a watch list. And if there's anywhere where the wheels come off the wagon for most traders struggling, especially in this market environment, it is that position sizing, understanding risk in a choppy market, and then what and where am I going to direct my capital towards, right? So, and that brings us into conversations about structure and outperformance. I'm going to show you one thing before we jump into the questions. I'll show you one thing that's a really easy way to understand outperformance and this 1 versus 3 month outperformance that gets so important when we're dealing with really sudden moves higher in the equity markets. So what I mean by that is we've had a really strong rally through March. I mean, we saw a significant move. In fact, take a look at these are the sectors here. Let me zoom in just a little bit. Just bear with me here. I'm going to zoom in just a tiny bit. And that is going to be a little bit better. Yeah, that's a little bit better, right? Okay, so take a peek at what we've got here. And I'm going to draw in a few levels. And you know what I'm going to do? I'm also going to record this for the notes so you'll have a quick little playback of this little segment. The question about where, if you're confused about where to start with sectors, is a great way to do it. And that is looking at all the sectors at once. Now we separate sectors from industries, and you'll see here, there's a nice little zero line. Over the course of the last 1 month, nothing right now by way of consumer discretionary, staples, energy, financials, healthcare, industrials, materials, real estate, tech, communications, and utilities, nothing's below that zero right now because we've seen, as you can see right about here, mid-March, everything just had a second half of the month significant rally. A rally and an uptrend are not one and the same. A rally does not always get us into, as it's often known as, bullish territory either. In a lot of instances, the rally has just continued very strong uptrends. That's XLE. In other instances, a rally has taken a market at the bottom or the lower oversold level of the zone of the top and taken it to the upper end of the zone. You know, I think right now, XLY, you'll notice I have the chart in the notes. XLY is a great example of really being right at a very important decision level. XLC, we can say the same thing. So you might say, gosh, Rog, this makes it look like everything's in an uptrend and buyable. Right. This is where we do the 1 versus 3 month reality checks. And now we're going to go back 3 months, not, right now, yes, we're going to end up looking at the first quarter. But the reason I want to go 3 months is if it were February, we'd look at February, January, December, right? So I'm not going to do the quarter. I'm going to go back 3 months. Now we can see, do you see what I mean now? Things have basically just rallied within an overall week environment. Look how few XLE, XLU, XLF, XLB, and XLP barely have made it above that zero. So what looks like an unbelievably bullish market, and that might be the way you're hearing a lot of things right now, when you step back a little bit more, I've heard this saying, and I don't know who says it. It might have been one of my mentors. I got to give credit to somebody. I just can't remember whom, but I love this saying. Keep this in mind. Write it out or write it down. When in doubt, gang, zoom out, right? Don't zoom in. When in doubt, zoom out, right? So you notice I'm doing this 1 month versus 3 month thing, okay? 1 month versus 3 month thing. So that's something that I will start my Sundays with. I mean, I'll take a look at some of the, economic calendars and some of the chatter of the past week, things like that. I'll search particular topics. We'll take a look at what's going on with the CME countdown to the target rate probabilities, things like that. But, that 1-3 month juxtaposition really does give us a lot of clarity. Now, we could also do it with the industries. Now, the industries list is obviously a little bit longer. All right. If you're in the mastery and if you're in the futures room, when I do my deep dive every Thursday, we get these videos out. We do a deep dive, macro market deep dive. You all get this video and we look at this view on a regular basis, and you can see hopefully why. Now here you have a lot more niche, industries. They're not all liquid. They cover everything from regional banks to REITs to gold miners to clean energy to ags to biotech to semiconductors, right? But again, it's the same conversation. Almost everything looks really, really good. Very few markets are below zero. By the way, you might say, which ones are still below zero? You'll see retail is one of them right there. Retail is one of them. Most of these look quite strong until You do that 3-month gut check, and then you realize, oh, very few are really still trading in a strong way. And look at this, oil services. Of course, oil services have been in an uptrend. Uh, Explorers, right? This is XME, that's miners, right? So there's GDX, Moo. You might wonder, what the heck is Moo? There's an ETF called Moo. That's your agribusiness. Let's see. Inflation, stronger commodities. Agribusiness is going to do pretty well in that environment. KIE is actually insurance, and KRE are regional banks. This doesn't mean these are in uptrends, but this is where you can start looking for structure that might be tradable. All right. I hope that helps. I just want to do a quick little 5-minute breakdown for y'all. I'll throw this little video in the notes. Let's get to our questions. Just bear with me one moment. Let me make sure I get this little video saved. Okay. We're on the video inside of a video. Very meta. All right. So let's do it. Let's do it. Bear with me one moment. Okay. All right, jumping into the questions. Hey there, Mark. UNG is extended to start. Okay, is it too extended to start a position? Well, extended is what? Extended is relative to the zone that we entered in, right? So let's talk about where we entered and where we are right now. And whether or not, the question really isn't ever, is it too extended? Although I love where your head's at. Rob, what am I missing that I could cause myself problems? Brilliant. I love that. We got in back in here. The wave, the volume ledges, the Darvis, these are our zones, right? That's the zone. Look at where we are. So we're actually at the T2 right now, right? If you recall last week, in the Sector Secrets Mastery, we scaled out and took profits off the table for the second time, because when you buy on the dip, that's the kind of thing you have the luxury to do. So my friend, I need a pullback. I mean, at something, even this volume ledge right around 1725, I need something, even a shallow pullback to work with, because this is really a brand new high. So is it too extended to start a position? As far as I'm concerned, yes. Yes, you're right. Unless you're a breakout momentum type trader. And, look, I don't want to say, Rod, you're telling me no, but you're giving me a however. There is a psychology in the market. This is what Nicholas Darvis took advantage of for, I'd say, most of his career. What you have here is a new high, right? What you have here is a new high. And oftentimes, if we can close above that, it will end up in far more traders' radar. And what's going to happen is they're going to buy into that new high. It's just a straight up FOMO trade. It's going to trigger new high. Traders are thinking, oh my gosh, I missed the move. It's a myriad of FOMO type thinking and talk. The punchline is traders will often see, after a pierce, there is a whole new wave of interested buyers. So that might be something to watch, but that is not my jam, my friend. But thank you for the question. Hey there, Mark. Do I have a checklist for my basic day trade setups? I do. I include them in all the day trading classes that I have done over the past 2 years. I go over my day trading we actually did a thorough day trade breakdown in the Mastery last Wednesday. I'm sure we'll do a little bit of that this Wednesday. Although the Mastery is not about day trading, we do, the Mastery reflects everything that I do. I also do some day trading in the futures room on Tuesdays and Thursday morning. So as far as a checklist, I'll tell you this, Mike, and a lot of folks ask me about checklists and things like that. Here's what I would recommend, because I wish it were as easy as to say, here's my 9-point checklist and enjoy day trading. There's too many moving parts. However, the kind of checklist that I do mention in the rooms are things like, what do we do? Things that are along the lines of what do we do at certain times of day? There are going to be things like, do I want to be bullish or bearish today? That's a sentiment checklist. What do I want to look at between 9:30 and 10 o'clock? Volume and volatility, right? So at least I'm pointing the direction to This is the mindset between 9:30 and 10. This is the mindset between 10 and 10:20, 10:20 to 10:35, 11 o'clock, 11 to 11:30, and come 11:30, I'm done. So most of the process is really going to be, Mike, related to time. Here's one thing I will say. If for no other reason than this is just what keeps me on track, our process is very repetitive. You watch me go through 6, maybe half dozen, maybe a dozen sessions, you're going to see the repetition. You're going to start to see the same levels that I see. And not to mention, you've got the indicators automating all the things that I'm looking at anyway, right? So whether that be slow stochastic, hourly price movement ranges, our breach retreats, things of that nature, you're going to see all that on your charts as they appear on mine. So the learning curve of having to know how to find these levels is gone, because most of you know I automate. I can't think of something I don't automate, right? We automate everything, and by way of the analysis being automated. We automate the trend structure. We automate the breach retreats. We automate the opening range and all that stuff. We automate the volatility, support, and resistance. So with the automation comes an easier learning curve. And that's something that I think can make a big difference for traders that are learning to deal with quicker moving intraday timeframes. All right, next up, let's see here. Any idea what would have happened with crypto? Anders, I haven't even looked at it, to be quite frank. I just clicked on your question just to mention. By the way, we're gonna have I think the CME's got some new crypto products coming out very soon. I mean, they've got options, I think, coming out. I think they have micro at this point, but no, I have not looked at crypto this week. I look at my crypto about once a month. I find that if I look at Bitcoin, and the coins that I do have, really any more often than that, I find myself getting wrapped up in so much of the narrative. Now, probably the most important thing, though, Anders, and we were right on the cusp of that last week, so I'm going to point it out here. We have taken out, as you can see, finally, we are trading, it looks like, back above the 200 exponential, the prop dot. We broke out through a Darvis level. Look at this gorgeous Darvis level that's been in play. So that move, I think, is very technically validated. 200 Darvis, it's the same stuff that we would talk about in any market. I don't know that it just means up, up, and away from here. Like I said, I have a couple levels that I park by way of alerts, where when Bitcoin falls to a certain level, when Ethereum falls to a certain level, they're just basically alerts for me to go buy some more of those. Other than that, I just don't look at it that much, because I find it just takes me off the game for me in Bitcoin, which is long term, right? I think one of the last times I was on Benzinga, I wore my diamond hands shirt. I'm a hodler. And I think that for that purpose, one or two times, and if you are a hodler too, if you're a diamond hands versus trading, I don't actively trade Bitcoin, to be quite frank. But if you're looking longer term, once or twice a month is about all that I recommend even looking at it. I try to steer clear of all the Bitcoin chatter. I try to steer clear of all of that. I just look at the charts and just wait for price to reach levels that I think merit getting in. And it's interesting. My phone, and I'm sure this will happen, my phone will start ringing off the hook again when we get to 60,000. Oh, Raghee, what do you think about Bitcoin? I think you should have called me at 35,000. That's what that's what I'm going to tell them next time. When my phone rings at 60K, Rog, what do you think? I think that you should have called me $25,000 ago. And I'll tell people at this point, if 60,000 is what gets your attention, and it sounds harsh, but it's true, you got no business in Bitcoin, right? I know nobody here thinks that, but you all probably get the same phone calls I get from friends and family when the markets make a big move. Oh, what do we do? I'm thinking, educate yourself. That's what you need to do. So great question. All right, what's going to happen with USO this week? There's going to be crude oil inventories, John. That's what's going to happen this week. and there's going to be a lot of trading. What I mean, John, really, I don't know what's going to happen this week. I think it'll probably continue to the upside. I think we'll probably get some volatility in this market that I would love to be able to buy at, but I won't be a buyer probably until about the 55 because we're getting a little bit more wobbly. Please remember that so much of what is going to affect crude is not a hot zone, meaning it's not going to be a scheduled event. It's not going to be something we necessarily see coming, like OPEC, like crude oil inventories. It's going to be narratives out of Ukraine. And that's going to make for a much tougher understanding of when the volatility could kick in, because that's always the concern, right? When is the volatility going to kick in? What would be those catalysts? I think we all know the catalysts, right? Scheduled events, OPEC, and obviously Ukraine. So looking at where we have a lot of volume, gosh, I mean, clearly that would be a level to watch. We know that we have some support by way of Darvis. Let's see, both here at this Darvis level, right around 96, and then another level right about 93.60, 93.70. And that would, for me, be the kind of zone that I would love to see. You know, I don't know what the reason's going to be, right? But I would love to see something like this reached, and then I know what I want to do. So if the market throws a pitch like that for me, then I know what I want to do, right? That's the difference, I think, between traders who find themselves following their trading plans and traders who always feel like they're scrambling. They answer the question, not what is the market going to do, not what a certain symbol is going to do, because frankly, nobody knows, right? Obviously. But they do know if price reaches a certain zone, right? What do I want to do then? Right? Is it within the zone that I would want to buy, get long calls? You know, if we pull back like that, you know what I'll tell you, going along the lines of what I want to do, what are the opportunities, not in any way suggesting I know what's going to happen, but rather if crude pulls back, I'll tell you what, I'm going to be a lot more interested, John. I'm going to be a lot more interested in oil stocks, right? I'm going to be far more interested in oil stocks, OIH, XLE, XOP, than I will be in, say, USO or crude oil. I'm going to be much more interested in oil stocks because I believe that when we get a pullback in crude, which we will, oil stocks will probably also pull back, but we won't have as much volatility that's difficult to understand why and when it's coming. Well, we know why. We won't know when it's coming because of Ukraine. I think oil stocks allow us to navigate around all the uncertainty about Ukraine. All right. So next up is thanks so much. The notes are great. So Red Dragon, I kind of put these notes together for myself, and now I just make them a little bit prettier and maybe not that much prettier. You know, this is just sort of this, where should my attention be from hot zones to structure of the market? I mean, this is the way I think about each sector. This is the way I think about the indices. I kind of got into the whole idea of, if the NASDAQ's going to keep moving higher, it needs not more XLK strength, because XLK has done its job. Apple, Microsoft, they buoyed the XLK back above the 200, back above the equator. XLY and XLC haven't. So this is where the NASDAQ's vulnerability is, right? And this is also where, if the NASDAQ's going to continue, the answer would be. By the way, we have the same thing for the S&P. This is at the heart of the watch list building that I talk about. And again, tomorrow at 2 o'clock, if you haven't signed up yet, you have a little bit of time left. This is going to be the discussion. How do you build a watch list? Well, I'm not punching things necessarily into a scanner. I'm doing a very old school scan. We do things like, oh, hang on, I think I've got it up today because I was actually doing this myself. We look at something like this. Now you might say, whoa, Rog, what just happened? Wasn't ready for all that going on. Let me show you how easy this starts. Put the tide the broader conversation over here, then list the stocks in order of their weighting. Okay. Okay. Then you ask yourself, one stock at a time, what is the structure? How easy have we made structure here with the JT trade flag? Neutral, neutral. If I want to be a buyer of XLC, TMUS, there's your outperformer to the upside. That's how easy that is to find. If you want the best downtrend within the XLC, it's actually Disney. I would say then followed by likely XLC, Comcast, Verizon might be close to organizing into a downtrend, EA, right? So you start looking at the grab candles, you start looking at the flag. So if all you're looking at is the color of the candle and what's most consistent, red, green, or blue, and then you actually look at the trade flags and say, all right, what's the structure of the momentum? What's the structure of the trend? All of a sudden, you look at this group and you say, oh, I know exactly how to rank each one of these stocks. And then we just go from there. What you trade is more important than how you trade it. Now, I appreciate that, Red Dragon. Hey there, for real. Make sure you smash that like button. I appreciate that. We get a lot of terrific views on these notes. I'm so impressed that on a Sunday night when most people are just sort of phoning in the remainder of the weekend, champions are made on the weekends, gang. The weekends are always where the separation happens, right? I always think of summer as a sort of separation season. Some people just sort of check out in the summer, and other people are just diving deeper into what it is they want to do. So they're nailing it in the fall. It's that separation season, right? Summer. And then I think every weekend is a really tiny microcosm of that, where those folks who say, look, I want to get a jump on Monday and I want to slay the week. Take a couple hours on a Sunday evening and they get ready. So kudos to you all. Kudos to you all. And yeah, so I do these notes, and I do notes every day. I'm just sharing the weekly ones with you all. So what I hope is that it's helping you all kind of see what I'm looking at and get pointed in the right direction as well. And then you get to see a little bit of my analysis and so forth. So I think the charts are really, really helpful. And then during the week, I'm kind of a workflowy nut. During the week, we have, notes. So here's, for example, there's some notes from January. You can see same idea, only that was for that day. So I'm a note typing in kind of trader, because it's so easy to lose track, right? It's so easy to lose track of what we're focusing on when we're having these larger discussions. So this way, if you have to come in and out of the conversation, you have the notes, which I kind of jokingly call the closed captioning of my brain. All right, so we covered crude. Another great question is gold. Yeah, what do we want to do with gold? We bought gold already. So again, I don't always want to say, hey, this is what we already did. I want to at least show you what we're doing. Here's another thing, gang. When I give you analysis like this, I want to at least give you some actionable zones and levels. But the truth of the matter is, these aren't trading setups. And there's a reason I give you these notes for free, because I'm not giving you a trading setup. We're just having a good conversation where I hope I'm able to help the community. The truth of the matter is, if after you read some analysis, you think, I have no idea where to buy or sell, which markets I want to prioritize, I have a scan of stocks that are 4 dozen names, that's not helpful, right? When your notes really want to whittle down, sharpen the focus, you don't want to go wide angle. A lot of traders think, well, to go really wide angle with my notes. No, actually, it should be the opposite. When you're done with your notes, when you're done with your scans, everything should start to come into focus. Things should get narrower. You should have less, not more. And I still see a lot of traders with more at the end of their analysis, and that's sort of the opposite of what you want to do. But we'll talk a lot about that tomorrow during our first bonus session. Very excited about that. Gold, we're going to buy a dip again. You'll see where I'm looking at this volume ledge right around 1928 to about 1932.5. We bought back in here. Here is March 16, the drop on March 15, March 16, and we bought GLD calls. If we have another drop along those lines, preferably to about the middle line of the wave, which is sitting at about 1920 and a half, I'll look to get long calls in GLD again, or MGC futures, or the full size GC futures. Okay. So yes, I am very bullish on gold, and I want to get in again. Like I said, we're still long. So until we get either stopped out at the break even, or we just keep going higher and scale out of all our contracts, I'm really not in enter mode yet, because I'm still managing that position we built, going back about 2 weeks ago. All right. Next up is, hang on, I'm trying to kind of scan through here real quick. I know we're out of time. Gosh, that goes quick. So where do you get the notes? If you are a member of the options room, futures room, or the sector secrets mastery, the weekly notes have already been alerted. If you're looking for my daily notes, that is in the sector secrets mastery. Okay, so it just depends where you are right now. And everybody, whether you're part of the community here at Simpler or not, we make this show available for everybody. So hopefully you're getting some of that benefit there. And thanks for your time, and thanks for smashing that like button if we're moving the needle for you, if we're covering things that are just going to help you prepare for the week, hopefully in a better way. So again, always appreciate the time. And they do show up on the app. So those of you who are wondering, Rog, can I see the notes on the app? Absolutely. They actually look pretty darn good. So if you're on the app and you click on the notes, I don't know if you can see that, but I don't know if you can see that at all, but they show up really, really nice. And you can just read all the notes, and you can look at the charts right from the app. All right. Do I look at subsectors? I do. They, Emmanuel, they have to have some clarity. Of course, we talked about the 1-3 comparison. Look at KIE, look at KRE, look at XLE. So once I start at that larger view of what's outperforming, what's just correcting a downtrend and choppy, or what's useful to us by way of a trend that has a likely chance of continuing, then I'll start looking at setups. And yes, I mean, healthcare to me is not a sub sector, right? I mean, there's subsectors in healthcare, exactly, to your point, IBB, things like that. Yes. But what I'll do is I'll start with the broader industries. And then, for example, if I end up not liking anything in XLC, XLK, XLY, QQQ, then we'll start making our way into, say, SMH, CLOU, things like that. So, what are those sectors within, or what are those industries within the sector, the way that it's listed there. All right. So I'm going to wrap up the show here, gang. Sorry about that. That 30 minutes just flew by. What was I using? That's called Koyfin, 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 Koyfin. That's what I was using for the comparison, the 1 and 3 month comparison, for those of you that are curious. All right. Did my favorite Formula One driver win today? Matter of fact, he did. Yes. I don't have a super favorite, but my favorite team won. Yeah, my favorite team did win. Yeah. Okay. So let's see here. Am I still in XLC and CLOU? Yes, I am. CLOU looks far better than it did, David, last week. And obviously tech has been a little bit more froggy, jumping up in green than I would like. But I think we're in two very laggy parts of tech. In other words, these did rally with the broader markets, but we shorted the best laggards, right? They didn't participate in the bullishness as much. So we do have XLC and CLOU, and I'll tell you what, I've got a very close eye this week on XLY and XLC. So I'll be doing a deep dive when we start building out our watch list as we're doing that bonus session. We're very likely going to start digging into the XLC and XLY tomorrow. That session is going to run 2 hours, between 2 and 4, and we're just going to have a deep dive on that watch list building process, as we are likely just to get a better feel for what we're going to trade this week. So we'll build our watch list as I show you how to do that. You can join me tomorrow, 2 o'clock at simplertrading.com. Join sector. You can see the link right there on the screen. Thank you as always, gang, for joining me. And I will see you all tomorrow for Charts and Coffee. All right. Be good to each other.